You know, we need to do an alternative investing podcast.
Oh God, he's gonna show us some baseball cards.
Not baseball cards. Worse. How about issue 52, first appearance of Black Panther?
How much does that go for? Oh, it's you have a 6 on it.
It's like $1,200 or $1,400.
Even for a graded of a 6.
I think a 9.6 of it is like $36K. You know, I found something that you can't get with SoFi safety deposit boxes. I visited mine today, especially for you, Tanner, and I grabbed two. How about a 41 Amazing Spider-Man first appearance of Rhino?
No, there you go.
I would have pulled some more stuff out. But
where's your mic? Where's everyone's audio today? I don't know. Everyone kind of sounds like trash.
Alternative investing.
Better now?
Since you always say that I don't want to talk about stocks.
This week, we had two big pieces of news. Number one is the debt ceiling passed. So the United States was able to increase our debt limit by about 1.4 trillion to about 31.4 trillion, which is good over the next couple of years. And that created more stability in the markets. So that was a catalyst in general for all stocks in the macro. Number two is student loans were negotiated. The pause is going away as the bill is passed. If the Supreme Court approves it, then the United States will likely be able to spend $400 billion to eliminate $10,000 for borrowers, but that's likely not going to happen. As a result of that, it seems like that wasn't priced into the stock because Noto and team guided that they were going to grow without student loans. And given that is being priced in, that's about $80 million a quarter or something like that, given all of those loans are going to have to be refinanced.
Even Noto put out that they're hoping that they'll do something around $2 billion of originations a quarter whenever this raise actually comes back. Student loans for SoFi are less risky than our unsecured personal loans. They're a much longer term investment. The average FICO scores for those products are around 765 roughly. And then the average incomes are even higher at 170,000. That this is not a cannibalizing product. In no way, whenever we add on student loans, will this have any effect to our personal loan business, home loan business, or any other products. All this is going to do is have a new effect on monetization, bring in new members at a cheaper cost, and then also have an amazing cross-sell ability to what Steven says is our target audience. These sorts of things.
Let's expand on that real quick. Expanding membership growth. When student loans eventually come back, the probability, because we don't know anything definitely, but the probability is that SoFi student loan business is going to pick up and that people that are not currently members are probably going to utilize SoFi for student loans, which means they are a possible candidate for membership with direct deposits. And there could be huge cross-selling ability across the board.
Chris from Data Driven Investing said, and I agree with him and I disagree with him at the same time, but he said, this is the product that we've had since 2011. We are known for student loans. This is where all of our technology has gone, is scaling that product to 10 times what it is today. To scale back to that, origination volume will be very cheap. We already have it. If we're just doing a higher amount of origination volumes, we'll need more employees and there will be an increase in expenses. So I don't think you can count it as free growth.
Just looking at where they were in 2019 and extrapolating out, it's been like 4 years since their last student loan number. Since March of 2020 was when they cut it off. It's been 3 years since then, over 3 years. They were doing 2.4 billion. The business has significantly grown. The cross-sell abilities have grown. SoFi's ability to execute and make those members way stickier has grown. They've offered new products in that entire time. And so now that it's back, yeah, I do agree that marketing spend is going to increase, but I think that that's going to be a positive.
It's extremely exciting to know that without any real addition to expenses, that we get an entirely new business model. Chris even said this, like before 2018 or something, lending made up like 99% of SoFi's business. Now it makes up 70%, but not at the fault of lending, at the amazing business that financial services has done. And now it's coming back in years to come as rates actually start to fall and refinancing actually becomes a really, really good product that people will look to do. That will be very exciting to know whenever, rates start to fall.
I think the student loans coming back is great. I think it really gives us an excuse to advertise the most efficiently we could possibly do. And that's hit our core target person that we're looking for, is those college students not being represented by the FICO scores in America. The way that SoFi does student loans is way different than a lot of other companies. But SoFi is really good at maintaining and building relationships with those students. And I can just imagine that all these new people that we will be getting from student loans are going to be there for the rest of their life, because it's just going to be an unmatched offer that they can't meet anywhere else.
Steven, what were your raw thoughts as we rallied into the sevens this week?
Pretty happy. I'll believe the whole student loan thing when it happens, though. I'm just not convinced that they are returning August 30th. It has gotten extended. I'll believe it when I see it. I'll get very excited when we have 100% certainty they are coming back.
I think this is as close to as 100% certainty as possible. I think the last straw to pull on would be that there was an amendment left in there saying that if a new emergency could happen, that could be a reason to pause student loans. But the truth is, if we're looking at the votings and everything from the Senate, they're trying to even go after the forgiveness. Now that won't go away right now, but it just gives you the idea that this is not even the problem that they had with the bill. There were some amendments that wanted to be made during the debt ceiling agreement, and it was like about natural gas pipelines and stuff that Steven's into. The stock ran up to $7. I think it's completely justified. This is a massive segment of our business. This is our largest product coming back. Even if it takes a little bit to get used to, this was not supposed to happen at this time. It is happening. If it doesn't, Steven, then yes, it'll go back to the $5 ranges, but that's perfectly fine. I'll just acquire more because I do think it will end eventually. I personally think there's...
I don't know if it would go back to the fives. Maybe it would. I mean, anything's possible. Don't forget, this is one of the big issues that they campaigned on. It's not the student loan forgiveness that's a problem. Student loan forgiveness is fine. It's if they extend the pause somehow again.
If it's coming back to the fives, I'm not sure about that. Anything can happen in the macro, but I think that like everything that I pretty much held was up this week because it was just a macro, like the debt ceiling in general was just a macro tailwind for the entire economy getting back on track. SoFi has an investor conference coming up very soon. I think it's next week. So now that we actually have some confirmation that student loans is coming back earlier than expected, I expect that Anthony Noto is going to be tackling a lot of our main questions. We had the initial run up based on people buying the rumor, essentially front running the news of this debt ceiling tailwind passing for SoFi. Now SoFi has to actually back it up with the numbers and how they plan on essentially capturing all of that market. And I think that Anthony Noto is going to be doing that next week in this chat.
If it's anything like the last call, it'll be really, really exciting. He'll have a lot to talk about whenever it comes to student loans. A better picture at what he's thinking about in terms of volume for originations, maybe even some insight on if the market's even looking for these types of products.
I actually looked at their events and presentations page on the IR. So the Piper Sandler conference is on the 7th, Morgan Stanley conference on the 12th, and then the annual shareholder meeting on June 14th. So those are opportunities for more details around this move in general.
If the stock dips below, if it dips below 6 again, in some sort of regard, I will go much heavier than I've ever gone into SoFi.
I think you want to say balls deep, but you don't want to be politically incorrect.
I don't see anything in my portfolio hitting a quarter of my portfolio.
What? You are too young to not have something as a quarter of your portfolio. What are you doing?
This guy's an ETF over here.
I run a small little ETF of like 30 to 40 positions.
Do you think SoFi at some point will be a $10 stock?
Yes.
Under that premise, what's the real difference between 6 and 7? At 7, if it goes to 10, it's an appreciation of 42.86%. If you get it at 6, it's 66.67%. If you're that bullish, just go deep right now.
It's called
let's
opportunity
just buy
cost.
on Monday. I'll buy with you.
It's not the difference of putting cash in and saying, okay, what's the difference of those two appreciating assets? I'm having to put it up against other positions that I also like. So I have to weigh which one I like more. The difference is what positions am I going to sell that I have less conviction in, and are they going to appreciate at that rate? So if it was cash, I agree with you. I'd put my money in now.
What other stock do you have a bigger conviction other than SoFi?
Like 5 other companies.
Not PayPal or Upstart, right?
No.
Oh, I know 3 of them, I think.
I don't think you would.
I definitely know one of them.
No, I'm not playing that game.
No, side bet and honor code. Just say yes or no, and I'll take it for what it's worth.
No, I said I'm not going to play that game.
Very certain that I know 3 of them.
I want to do research on my own companies. I'm comfortable with certain ones that I pick, and I'm fine with that. I don't want opinions on my positions in the public. I like my positions, and I'm going to keep them. I don't try to, but it does.
Shopify probably.
Oh, I forgot about that one. I think I got 4 now.
Oh, this is great conversation. especially on the SoFi weekly.
Yeah, right.
Did you guys see the interview that Elon Musk and the Babylon Bee did? Elon was super convicted that X or Twitter will be providing a full suite of financial services. Seems very similar to SoFi, good or bad. Steven, any thoughts on Twitter getting into the payments game, financial services game, or potentially the acquisition game? Do you think they could buy SoFi, or what integration you think they could have?
Yeah, Elon could sell shares of Tesla and buy SoFi. Is he going to? Who knows? We know that he wants the X app to do everything. In some cases, it's better to just acquire a good company that has everything built out rather than build it from scratch. Look what he did with Twitter. Instead of building a brand new platform, he just acquired the platform. Could he do it with payments? Yeah, he could. Is he going to?
Do you think Noto would want him to buy SoFi?
I think if the price is right, he's not going to say no. I mean, look, he has an obligation to do the best thing for the shareholders to create shareholder value. If the price is correct, he would have to take it to the board and there would be a vote. It would all depend what that price is.
Yeah, I also think that, just to George's comment here, thinking about who Noto would sell to is interesting, because we know that SoFi is essentially, this company that he wants to associate with his reputation, his legacy, his ability to execute as a whole. We also know that he's a really big Elon fan, just from their Twitter interactions. He really supported the move and the fact that Twitter needed an exec shakeup. He was this chief operating officer at Twitter. I think that, Noto would be really hesitant to sell to a lot of these legacy players, because chances are that they will not share his vision for what SoFi could become, even if he gets a payout. And sure, maybe JP Morgan, but realistically, I think that he would be more likely to sell to a company that shares that vision for what that payments provider could be, which is what Elon has with the entire vision for X. I think there is a contrarian take to say that Noto would be less likely to sell to a legacy player, but more likely to sell to a technology company like Twitter is becoming.
And to expand on that, arguably, in my opinion, Elon would keep Noto in place to run it, whereas a legacy bank is less likely to keep Noto in place.
I really think Elon Musk has bad taste in his mouth from all prior Twitter management and exec, and I really don't think Elon Musk knows Noto on a personal basis. And I think his first assumption is going to be Noto.
Noto left Twitter. When did he leave? 2018?
17, 16 era.
It's hard to say that Noto created all the problems or was involved with it, considering he wasn't there for so long. The Twitter problem started to come about during 2020.
Yeah, so he was the COO of Twitter during Trump's presidency. So he was kind of like famous for that for a moment, but he left right before it got all nasty and all the media started hitting Twitter regarding like the election and the Hunter Biden story. So a lot of the Twitter files don't even mention him because he left like right before it.
Yeah, he wasn't there.
Even still, I don't even think Elon Musk is even thinking about making the X app or the payments app just yet. And then also, like, SoFi has nothing to prove yet. We're all at the beginning stage building the bottom of the pyramid. Maybe in like 3 or 4 years, we'll have something like really, really cool to show.
I don't want anybody to acquire SoFi because I think as a shareholder, the investment would be better as a long-term investor of SoFi. But I wouldn't be surprised if a company comes to try to acquire them in the next couple of years.
I'm even seeing it in the chat right now. A bunch of people talking about PayPal possibly acquiring SoFi. It'll never happen. The problem is that SoFi is a bank. Acquiring banks is a whole other can of worms. If you have a bank charter, you have to completely change the way you do business. Personally, I think the only person that would ever acquire SoFi is a larger bank. This is sharks eating smaller sharks.
Noah says we have the tech now, and I don't think that we do. There hasn't been really any customers yet.
I think it depends on what your definition of the tech is.
Yeah, I think we have a long way to go. I think we have good foundation. The concepts are provable, but like we don't have like anything really cool to sell yet. Because I mean, look at Galileo's advertisements. It's just like they're just advertising their own employees, talking about like, what banks should do, and they're not really.
Yeah, but okay. So I agree with you that Galileo might not be as forward as some of these larger players like a Goldman Sachs or a Citigroup or something like this. But now that you're on the cloud, it kind of allows for unlimited scalability in terms of actually actual marketing, I wouldn't even look at B2B sales as through their marketing programs. This is completely different. Enterprise SaaS sales are you're talking directly with like C-suite executives. You're not going and advertising them and hope that someone finds your Twitter paid advertisement. So I think that they do that to go after smaller fintechs and these sorts of things. But I think a lot of the large banks and stuff like this that we're talking to is directly account executives talking with C-suite executives on the other side who are looking for a platform.
Just because.
And Tevis, please, because you're in this space, I'd love to know what you think about that and if I'm wrong, because you're in the software sales space a little bit.
There's a huge disconnect. Okay, so when you talk about B2B enterprise sales, especially like SaaS companies, there's a huge disconnect. Brand awareness is brand awareness, and that's great, but that's more on the B2C side. So like SoFi Stadium, all of their advertising campaigns, their TikTok dances, all this stuff, those are to get members on the B2C side. For B2B side, you have people on their biz dev team calling companies all day long, building the connections. It all happens in bars, restaurants, in conferences, and in events. It's all personal relationships based on these salespeople.
Yeah, you're 100% right. Like, there's no way we can tell by their advertisements. That's a good point. One way that we can tell, though, is like the actual SoFi app. And the SoFi app is not there yet. And I think Amit can attest to this yet. We don't even have like covered calls. And there's a lot of tech that's kind of just, I mean, we don't even have the ability to send money through Zelle yet. The first time we were fully on the cloud was on January 1st of this year. So, I mean, we've only been 6 months on the cloud. So I think that we're a little bit early here, and I think we're building products. It's just going to take a little bit of time to mature, and then we might be able to see some actual tech that they're talking about in these conferences.
When you're talking about tech, you're talking about internal product options in the app that you as a consumer can use.
That's the only way that we can measure their tech, because they don't talk about it. The tech is what Technisys has, which is building blocks that they can sell to companies so they can incrementally buy a cheap product from SoFi. But if they ever want to scale their business, they can do so pretty cheaply, buying more Lego blocks, software APIs that they can plug in and build their business from ground zero all the way up, no matter how many customers that they're looking at. That plug and play optionality, you can't see that as a consumer, but you could see the effects of it under SoFi's hood, like the SoFi app. The SoFi app is not there yet. I think we have a long way to go.
What I'm thinking of is when I hear tech, my mind is automatically going to the banking side, and Noto's saying that we are in talks with 12 financial institutions.
Yeah,
That's
well, he didn't
talk,
see
though,
that
not
because
actually.
he was meditating.
I mean, like, we can't assume we have anything until we actually see it, because like it is hard. It's like one of the hardest things to do business wise in America is transfer bank customers to another backend. Every person that I've ever talked to that's even competent in this area says it's just like astronomically difficult and also super expensive to do this. So the hard part of selling this software is saying that we can do it safely and cheaply. I think Noto said in one of his conferences that he can do that. And once the concept is proven, you can start moving over time. So even if we do land these big customers, it's going to take like a long time to get fully onto our system.
Honestly, Riley, you're spitting facts here, and I'm loving it. I love new Riley.
Okay, so somebody in our Discord this week posted this image along with another image around dark pool trades over the past couple of weeks. Dark pools are basically private exchanges where these huge institutions load up. It's not really open to the public. And here you can see the dates at the bottom, and starting on the 18th of May and all the way through the end of the month, you can see chunks of huge block trades or purchases over 10 million shares. So it seems like, and Tannor, I'd love your take on this too, but like it seems like a lot of institutional buyers are stepping in, and that could also explain in large part the 35% run up that we had this week. A lot of it was probably fueled by these big boys coming into the stock.
Yeah, sometimes we get caught in an ecosystem and people go, like I saw a comment recently on one of my videos going, okay, well, if everyone in this video or in the comments is buying or is already fully invested, then how is the stock going to go up? It's like, guys, we are not what pushes the stock as an investing community. Institutions push markets. That's what happened in Palantir. If the SoFi itch happens, it's not because retail picked them up. It's because institutions picked them up. This is very exciting to see. And I think it'll only compound as we get to profitability. Now, that might not happen in first quarter. A bunch of people use Palantir as the example. They took 2 quarters of profitability before institutions actually poured in. Tesla took 4 quarters, a full year of profitability before that stock skyrocketed.
I don't know, man. I think if we get profitable by Q3 or Q4 this year, given the market cap, and if it's from business operations, and if it's from a whole business line that we added out of thin air, basically with student loans, this could run really quickly.
There's a comment saying 33% institutional ownership isn't impressive. That's perfect, though. This is the same thing whenever Tesla was at that $40 billion market cap. And the stock, I think at the time, was the most shorted stock. Tesla was hated, but that doesn't mean that people that were investing were wrong. So if institutions don't like us at this price, that's great. Because if institutional ownership does rise to a more acceptable 50, 60, 70%, think about what that does to the stock.
Amit, can you throw up Atil's comment? Anyone read Peter Lynch? He said, find the company with small institutional holds. If you guys haven't read One Up on Wall Street, I think it's possibly my favorite book on investing ever, because he basically is saying that in certain categories, you have an edge on Wall Street because you're essentially a consumer of that company and you can see the change faster than some guys on Wall Street can. The reason why Peter Lynch advocates to find stocks with small institutional holds is because a lot of these institutional analysts, their job rides on how well they can pick these stocks. I mean, maybe not for the David Cavarinis of the day, but if you don't do a great job, that is very transparent because it's very quantifiable. The idea is that as a result of this dynamic, not a lot of analysts will take risks on small companies. And so Peter Lynch in his book has this example of like IBM. So let's just put it into modern terms. If you're an analyst and you pick Apple and Apple goes down 20%, everybody's going to say, well, Apple had a bad year. But if you're an analyst and you put your neck out and you pick a company like SoFi and SoFi goes down 20%, everybody's going to say that analyst had a bad pick. And so the idea around profitability and why these dark pool trades are interesting and why, student loans, and just putting this all into perspective, it adds a layer of safety for these analysts to be able to justify the stock without putting their neck out there, so that when they pick SoFi, they have something that they can point to. You want to be front running these institutions as a retail investor. You invest today when it's 5 billion or 8 billion, so that once they get that layer of safety from an institutional perspective, institutions start respecting the name more, start feeling like, hey, it's not really risky for my career to be the one supporting SoFi at this stage. It's not like a coin toss. At that point, when institutions jump in, look at all the biggest names out there. They're predominantly institutionally held, right? They're 80% plus, 90% plus held by institutions. You can have an opportunity to front run that entire move up. So SoFi is, let's say, 30% held by institutions today. Maybe in 2026, 2027, it's going to be 80% held by institutions. That delta is really huge for you to be able to front run from an analyst perspective. So I think that that's a really important understanding, because it's something that ties everything together in terms of their profitability and in terms of where they're going and the opportunity that retail investors have right now.
I think that's a really great point.
To expand on that, one, when companies such as SoFi hit that dynamic and they continuously grow and they hit different metrics, they start meeting requirements for different funds, maybe not just the S&P, but total market funds and other sector-specific funds that they can get added to, which can increase buying, and it will increase the number of institutions holding shares. The other thing, 80, 90% of institution held is, to me, very high, considering Apple is 61.23%. And that's the largest component of the S&P 500. So I don't know that we're ever going to get that high, but...
Yeah, I don't know. It's one position.
Yeah, but with it being the largest component of the S&P 500...
It's also like the number one most recognized brand in the world. So I think a lot of retails are going to be like, look at banks.
Yeah, I think it's
like,
the second most.
Wells Fargo or something.
Yeah, it's probably the second most purchased retail position aside from Apple.
Tevis, you're right. Wells Fargo, 76%.
Why don't you like Block?
We had a podcast about SoFi, and then we did an exclusive one talking about Block. And he said, if there's anything more overvalued than NVIDIA, it's Block Inc. He also said he didn't know what Cash App was. So he's just valuing the company on nothing. I saw this tweet talking about fintech companies. Cash App at the top, payments. PayPal and Venmo tying for second there, although they're both are PayPal's names, and then Zelle's below that. It's gaining an advantage at even a higher pace.
Is mobile downloads like the metric though?
I do think downloads does equal new customers. It is a great indicator to show where is the future of banking going. Out of all the mobile payment apps, that's where people are going.
It's not really banking though. It's more just sending money, right?
I disagree. They go after direct deposit. They go after everything. Please explain why I get excited about Block generating $18.56 billion in revenue, trailing 12 months, producing $240.9 million in cash from operations, 79 in free cash flow, then lost $353.4 million. They've diluted shareholders from 138 million to 603 million shares, and increased stock-based compensation from 14.7 million to 1 billion over the past decade. Convince me tonight. I find it very hard whenever I'm talking about any growth company to look at trailing 12 months. I think that's a silly metric to look at a growth company. That's whenever your ship is sinking and you're going, okay, well, how much can we squeeze out of the rest of this grape? I'm not looking backwards. I'm looking forwards. A lot of their dilution happened because of a very aggressive acquisition strategy. Afterpay being very specific, $29 billion acquisition is more like 11 billion because it was based on the price of the stock. And by the time it actually happened, it was around 11 billion. But still very, very expensive. Today, that's around 33% of Block's total market cap. This latest quarter, they didn't actually achieve 40% compounded annual growth rates on their gross profits in their total company. Cash App is still growing way above 40%. They are focusing on lowering stock-based compensation, cutting expenses, and reducing the speed at which they're hiring. They're still expecting to grow their headcount, but they were growing at like 40% per year. Now they want to do about 10% per year. Crazy thing is that the young population right now is primarily using Cash App. A lot of these payment apps are not interoperable. So you need to be in the ecosystem in order to use them. So you're talking about a company that, one, is in a very low margin business of peer-to-peer transactions that is starting to get into higher transaction-based things like payment cards, buy now, pay later. Their savings account was their fastest ever growing product.
What do they actually make off those clients? Because like we're talking about Cash App, like we're talking about teenagers fucking e-transferring each other $10 to go to the movies, and the customer acquisition cost is low because there's not a lot of money moving hands in Cash App relative to Zelle, which is integrated with like all the major banks, right? So like instead of downloads, look at transactions. Instead of customer acquisition costs, look at revenue per customer or something like that.
Just to state, I do look at Cash App like a bank. They don't actually have a bank charter, but they're renting a charter. Cash App can go from country to country with zero problems. All they need is regulatory approval from the governments and then a sponsoring bank in that government. That's how PayPal spread to 200 different countries.
How much of Block's business is the Cash App?
The majority, the 55% probably.
So over half
By
of
what
their
metric?
revenue is probably
Gross profit.
over half of their gross profit is driven by Cash App. On a revenue standpoint, why is March 2021 their largest revenue quarter?
Okay, so this is a thing. You can't look at the company that way. And it's because of Bitcoin. They have to buy Bitcoin for a millisecond and then sell it. You can't look at their revenue without excluding Bitcoin, because what you're taking in is the price of Bitcoin and at which they acquired it. The PEG ratio.
You like getting pegged?
The price to earnings growth ratio is 1.2 times. That's extremely low.
Isn't the average like 3 point something for most big tech companies like Apple, etc.?
So Apple's is 2.85. Square's is 1.2. This is a growth play. If you don't like Tesla, you're not going to like Square because you're valuing them completely different. The young generation is going after these payment apps. Cash App's the number one pick.
One thing that I love about SoFi is that they have high income earners, people with great credit scores, and they're in the younger demographic. When those people move up 10 years, let's say, we're talking about really big dollars. But when we're talking about the Cash Apps, I don't think that there's a lot of money there right now, because they're not really limiting Cash App to people who have high FICO scores or people who have high income. Realistically, where the money is, these individuals that are like the baby boomers, let's say, they're still going to go with the legacy players.
Steve, you're the guy who told me the statistic that said all this stuff about the largest wealth transfer in history is going to Gen Zers, that millennials and Gen Zs are going to be the highest earners by 2030 or something like this. These are all your statistics. And yet you can't see the idea that Square, not having an audience of big earners right now, will have large earners into the future.
Yeah, but here's the problem. it looks like quarterly basis going back to September 2020, they've only had 2 quarters where they broke 400 million in cash from operations generated. And it seems like that's when crypto may have been at spikes from basically what you're saying. So if crypto isn't spiking, show me a use case of how this company is generating cash.
That's
Cash
a good
in versus
point.
Cash out.
I'm not looking for them to generate cash right now. I mean,
Well, and that's a problem. This company's not a brand new company. This company's been around for more than a decade.
no, but Cash App is brand new. So the entire
Okay,
company
Cash
for the
App's brand new. 3 quarters ago, they lost 114 million cash. Like they lost cash from operations.
they're a growing business.
So
You know what I mean?
Palantir's
they're-
a growing business. They're not losing cash from operations. They're
Call that.
playing in a space that has so much competition. So
Yeah,
much
and they're the number one player. A person stays with their bank for 14 years. It's about customer acquisition.
But who looks at them as a bank? Like seriously, who looks at them as a bank?
Cash App's savings account was their fastest ever growing product. Guess what the APY on that product is? 0%.
While you guys were talking, I signed up for a Cash App bank account. I somewhat agree with Tannor. I really do think Cash App has a lot to offer. Cash App is going to grow from convenience. Just like Tannor said, nobody cares about the APY because it's convenient. If Cash App were in the next 5 to 10 years just to completely decimate, there's going to be a massive shift to get these old banks in competition mode and try to compete. And who's going to be there with all this proprietary tech? It's going to be SoFi. This is like literally their strategy. Everything that you've said that has been good about Cash App is literally the bull case for SoFi because it makes it way more scary for traditional and regional banks. They're only going to see a down chart as their older clients start dying off.
Why would anybody use Cash App as a bank versus either a traditional bank or SoFi when banking is just one aspect? When you're with a bank, you want a bank that you can go to for home loans, private loans, for the safety deposit box, CDs, investment accounts.
You don't even know the audience. Their audiences are not buying CDs. Okay. Yeah, they have 0% APY in their savings account. They're not looking for guaranteed deposit like vehicles. Okay.
How are they going to generate cash from operations if they don't have other products?
Finance is a massive margin business. They haven't even gotten really into lending. Of course, that's how companies like Affirm and Afterpay even got their name. They took around a 2% market share of lending.
Oh, Steven, are you going to buy Square?
No.
Okay, there we go. That's the conclusion. That's the conclusion.
I would rather add to my wife's shares of Tesla over $200 than buy Block.
Yeah, but I don't see Block giving a mortgage to anyone, Tannor. I don't know where you think.
Dude, that's such a ridiculous statement.
You think Block's giving out mortgages in the future, bro? You think that's what's
do I think that they'll be doing student loans, personal? Yes, I absolutely.
And how long do you think that's going to take to materialize?
It could take 10 years.
So why the fuck would anyone buy this stock? What the fuck?
Because I do believe before that happens, they'll have 100 million users at a $10 to $20 customer acquisition cost. If you can see a payment processor like PayPal and value them accordingly, and then say, oh, by the way, we're also doing direct deposit and all of these different things, plus also an e-commerce side on the other side. Okay.
Bro, but the opportunity cost of your Square shares for 10 years for that to happen versus SoFi. I don't get the thesis, Tannor. You haven't convinced me yet.
I don't need mortgages to be out today for the stock to be valued into the future. Stop.
So answer me this. Why would somebody want to go with Block and have a Cash App instead of going with SoFi and having the whole ecosystem?
Because they don't know that SoFi exists. Whenever people are looking for a new app, they go on to iOS. Either they hear it from their friends or they go on the iOS and they go to finance.
You don't think that SoFi is going to grow to the point where people know what SoFi is?
There are 330 million people in the States. You guys are placing me like if I say one person is going to do something, then the rest of the competitors can't do anything. There are massive growths in PayPal, SoFi, Venmo, and Cash App. There's so much room to grow because the audience we're taking is all from, traditional banks.
Anyway, we can all agree on SoFi. This warrants another discussion. We got to bring this back up next week.
Well, I can never get those 30 minutes of my life back.
No, you can't. But why is stock-based compensation over $1 billion? Why is it growing?
Because Palantir is less stock-based compensation than Square.
They had one of the largest acquisitions last year.
Wait.
Stock-based
SBC is growing year over
compensation.
year?
Year over year for a decade.
What the?
Year
I'm a
over
Palantir
year.
shareholder. I'm not used to SBC growing year over year. I'm used to declining SBC,
So
so I
again,
can't
here,
invest.
here
I
are the
can't invest
numbers
in that.
from
Okay,
2021.
stop.
They
This
must
is
have done a
boring. This is
good
boring.
job.
I can't
Tanner,
visualize this.
so what?
$608
How are you
million.
buying this
And
stock,
in
bro?
2022, executives must have done a really good job because stock-based compensation was $1,071,000,000.
They're not even hiring fancy
300,000.
engineers. Like at least Palantir
mean-
hires smart people. Who the fuck are they giving all this SBC to?
Honestly, I feel blown away that you guys can't see it. Like
SBC. Wait. So how do you answer that? SBC going up to $1 billion. What's your response to that?
they are
How is that a good
acquiring
thing?
like crazy. They're doing stock-based purchases of some of the largest acquisitions of
Acquiring
2021.
has nothing to do with SBC. That has to do with dilution and issuing shares to raise capital to make the purchases. I'm talking stock-based compensation. It can be found on the cash flow statement.
Well, I'll have to
Line
look into
item.
that. Sorry, I thought you were talking about outstanding shares.
No, stock-based compensation and freaking SBC.
They did say they were going to lower it. And the thing that I care about
It's
the
up
most,
to $1 billion.
It's over
Bro,
$1
like
billion.
they're not even Michael Jackson, and it's a Billy, no Gene. Like what the fuck
okay,
is going on?
listen. Here's the problem with whenever
read through the financials, read through the cash flow statement. How do you not read through this before you invest in something?
dude, I am. That is such a
Damn.
ridiculous statement to say that looking back at what's happened in the last couple of years makes up this stock. Okay, even if they are a low margin business, you're buying at low margin multiples. So if it's going to improve, I disagree with all your comments. Okay, if you're
I just
buying a
don't
low
get how
margin
you
business,
hold on. I'm confused how you think they're giving out mortgages. I'm like, when the fuck am I got my mortgage from Cash App? Who the fuck is ever gonna say that?
bro, it's gonna be 10 years from now whenever the actual audience is in their 20s. Right
Hold
now,
on, what's
it's
gonna
like in their
happen? What's gonna
teens.
happen? What's gonna happen is 10 years from now, their stock-based compensation will be $20 billion, and then then the mortgages.
Unmute.
muted.
Unmute. Yeah, the host is muting me here. He's an oppressor. Okay. Palantir can wait. Okay. Listen, if you're buying low margin, that's the price you're getting. The PEG ratio is still 1.2. So
Stop
what you're
saying you like
telling
getting
me,
pegged, bro. What are you saying?
what you're telling me is that you guys think that there's going to be margin compression on this stock. Let's not even talk multiples. Let's talk buy now, pay later, or equity purchases, or crypto, or any of these other high margin products that can actually happen on this thing.
Technically, we are seeing margin compression considering gross profit margin was 40% in 2019.
But
And
that's
now
because you don't
it's
know the
34.
business.
Tanner,
You don't
can I
know the
tell you what I
business.
don't
Just
like about-
saying.
Because
Can I tell you
it
what I
went
don't
from
like
being
about
a Square company to a Cash App company.
They need to be a
I'm
fucking triangle company and get their shit in order or something. Like this is ridiculous, bro.
If you're watching
Have
on
fun.
this channel, just
Counter
hit up.
weekly starts, but keep this going because this is fun. Go ahead, Ryan.
Okay.
Bye.